Welcome to the first episode of the R&D Tax Show, the show to help accountants, tax advisors and their clients claim R&D tax relief. I'm Tessin, the founder of GrowthPad, and we help companies claim research and development tax relief. As this is episode 1, today we'll cover the basics of research and development tax relief, and we'll run through the following. Just an overview of what R&D tax relief is, why it was introduced, the benefits, what qualifies, the time limits of claiming, the different schemes available within R&D tax relief, the typical clients that make a claim, and also I'll just run through an overview of how to make a claim. So as an overview, R&D tax relief is essentially funding through the corporation tax system for the development of new or improving products, processes, software or machinery. Why was it introduced? Well, in the 80s and 90s, the government did research and they realised that in comparison to the GDP, the amount invested into productivity was decreasing, especially compared to like other countries around the world. So to keep us competitive, they introduced this incentive in the year 2000. And since 2000, the relief available has dramatically increased, hence why more companies are claiming R&D tax relief now than ever before. So what are the benefits of claiming research and development tax relief? Well, it all comes down to cash flow. So when you spend money creating a product, you get a proportion of that cash back. Now what that does is either one of two things. It can reduce your corporation tax liability, so you're paying less tax, so you're saving more money, or it can result in a payable tax credit in cash, which is just an increase in money in your account. So in a summary, they're the two. That's the main benefit of claiming R&D tax relief. So what qualifies? Well, firstly, the business has to qualify, and to qualify, it has to be within the corporation tax system. Essentially, there'll be PLCs and LTDs, but there are other organisations that are subject to corporation tax, including CICs. Also, the company generally has to be a going concern. Secondly, the actual project itself must qualify. Now, the definition of what constitutes for R&D for tax purposes is quite wide. It's not what you would think in your head. So I'm not going to go through the definition now, as in that's a whole half an hour for itself anyway. But generally, if the project is difficult from a scientific and a technological point of view, as in it's difficult to do, then generally it can qualify. And the third thing to claim R&D tax relief is costs. So what costs can you claim back? Well, staff costs, outsourcing, materials, utilities, software used in development, and also, although not applicable for 99.9% of companies, is costs for like trials for experiments and things like that, but that's usually for pharma companies. There are other costs, but most of you will never ever come across them. So what are the time limits of making an R&D tax claim? So you must claim within 2 years from the end of an accounting period. So let's say, for example, your year end is 31st of March 2018. You must make that claim by 31st of March 2020. So 2 years. There's two different schemes within R&D tax relief. There's a scheme for SMEs and there's a scheme for larger companies, and this scheme is called, for short, it's called RDEC. So the SME scheme is actually more generous in how much you can claim back as a percentage of your costs. So it's generally 25 around 25% of your costs. For the RDEC, it's about 10%. So just to distinguish the difference between SMEs and RDEC, if you have less than 500 employees, you're definitely going to be an SME. So who are the typical claimants for research and development tax relief? Well, it's software companies, manufacturers, engineering firms. I would say they're the typical clients claiming this. Now, these companies could be making things for themselves, or they could be making things for their clients. Also, let's look at software. So, for my clients, for example, I've got companies in the digital agencies. I got a banking client. They're making an open bank app. So fintech. Can't spell fintech. A manufacturing firm. I've got paint manufacturer, chemicals, cleaning products, fertilizer. I've got all sorts. And engineering firms. Just as I've got a client who's a civil engineering firm, and they make things like anti-flooding systems for towns and cities, and things like bridges and things like that, infrastructure for towns and cities. So that's just to give you an example of typical claimants, specifically also who I work with. What I'll do is I'll release more information about these different sectors and the typical claims they do in subsequent videos, so it'll help you identify which one of your clients can potentially qualify. So how do you make a claim for research and development tax relief? Well, as it works through the tax system, what we do is we identify the costs and put that into a report, and those costs then go into the corporation, well, the tax return, well, the company tax return. And also, to back up the costs, we have to tell HMRC what the company did, why does the actual project meet the requirements of research and development tax relief. So what they did, how they did it, what was difficult about it, how they overcame those difficulties, and just little details of that. But I'll go through a whole video explaining that specific aspect of the claim. So costs, technical report. So this is then packaged and then sent to HMRC's R&D tax team. They process this information, and then your client gets money back or gets a reduction in their corporation tax. So that's the first episode. Just a short summary, just giving an appetizer of things that I'm going to discuss and help you with.